WeWork announcing it has agreed to go public via SPAC merger with WeWork's Acquisition Corp. That values the company at $9 billion, including debt. CEO Sandeep Mathrani was on Squawk earlier today discussing that deal.
We were approached by WeWork's and other SPACs. We looked at our plan. We'd seen what we'd accomplished in 2020, and we'd seen a path to profitability. And we thought it was a good time to raise additional liquidity, to de-risk the balance sheet, and to make sure that we had a path to profitability. So sometimes, the path picks you. You don't pick the path.
Oh, boy, this is ripe for us, Jim. I mean, $9 billion, including the debt, versus a valuation of $47 billion back in 19. WeWork's, we should also let you know, is run by Vivek Ranadive. He's the owner of the Sacramento Kings. This is more interesting than the Kings, I guess, lately.
No kidding. I'll tell you what's really compelling about this. It's Barry Sternlicht's quote. I happen to be a big fan. Barry, it got a bit of a Midas touch.
He's in the pipe.
Yeah, and he is saying WeWork is the leader in flexible space. Well, what do we need more than anything else? Who knows who's coming back and who's not? Is there a way we can get some flexible space? Well, WeWork has it. So it's kind of like it's just as it wasn't the company we needed a year ago. It is the company we need now. I have to tell you, I have been very critical of recently a lot of SPACs. I'm not critical about this one. But plus, there's a lot of heavyweights involved.
Yeah, Fidelity. There's Sternlicht, as you said, who, by the way, he made headlines on Squawk earlier in the week when he was talking about the SPAC market being, quote, out of control.
The bucket shops
in some places. I know you guys, you and David obviously talked a lot about that. You do need people to return to the office. I'm also thinking about, sure, on the surface, it sounds perfect, right? The timing's perfect.
Right.
Temp space. But what about existing leases that are already in place from some corporations in big cities? You need people to come back to the big cities for all of this to work still, right?
Well, and the occupancy is meager. It's below 50%. I agree with you, but look, we're faced with a world where if everybody gets vaccinated, you're going to go back to work because the overlords, the companies, are going to make you come back to work. I mean, Dave, I keep thinking about David Solomon at Goldman. Mm-hmm. And look, if everybody's vaccinated, they're going to need every inch they have in that building. And I think that there's need for flexible space for a lot of companies that are kind of on the fence. I went to Adam Newman, remember him?
Yeah.
What did he make? He made a lot of money.
He made a lot of money.
I visited, I took a tour with Adam Newman midday of one of his facilities. It was hallucinatory, so to speak. But what was amazing was that it was one of the most poorly run, greatest places on earth. I mean, they spent a fortune. They spent a fortune in tequila. Jim, they had top-line tequila, and I say that as someone who's tended bar at a Mexican restaurant.
You know a thing or two about top-line tequila.
There was Clase Azul. It was really Clase Azul there.
Do I'm starting to think that the return to cities is going to happen a little more powerfully and quickly than people think.
I agree with you. I completely, with the exception of San Francisco, where people are a little fearful, and New York City, where people just there's a lot of public transportation that people still don't want to take, I think. But yes, and they were talking about a lot of cities that are just blossoming, and I'm seeing so much activity in Austin, Houston, Dallas, Colorado. I don't know, Florida, obviously.
Shepard Smith here. Thanks for watching CNBC on YouTube.